Time to take your seats, please.
Thank you.
Oh, we are.
Just waiting for a few last stragglers to never get everyone.
Welcome back, everybody. The second afternoon's the last stretch, and we'll begin with panel number 10 on developing strategic partners in enterprise supply chains, special case of alignment. And the chairman of this session is none other than Dr. John Gattorna, whom I don't really need to introduce any further. I think you know who he is. So over to you, John.
Thanks, Ralph. Good afternoon, everyone. I apologise profusely for making you work so hard this morning, but I think I was being a little greedy. I was trying to get a lot of things in. These topics, by the way, the 12 topics that I chose, were originally about 30 topics, and over the last 18 months I got them down to 12. And then I wanted to reduce the program, which in Singapore we ran for 3 days, down to 2, because I know how busy you are. So we wanted to fit in less time, more topics. So you sort of didn't get your coffee break this morning, but the good news is that after our discussion, we're going to give you a break, and then we'll come back for the last 2. So we're on the downhill. We've only got 3 to go. As Ralph said, I couldn't be restrained. I had to, in a sense, come up here and talk about one of my favourite topics, which is about strategic partnerships. And I would like to briefly introduce my 3 co-panellists here. Jonathan Guyatt, very good colleague. He's the head of supply chain at DKSH, which is a large Swiss trading company operating out of Thailand. And John also is the co-head of the FMCG business unit. I've known John for a long time. He worked previously for DHL and also General Electric. And he's a great client because he lets us into his organisation to do whatever damage we can do, right? And we'll come back to him in a moment. We have on my right here Georgia Katsanis. Georgia is the president in this part of the world of an institution called CEO Clubs in Southeast Europe. She'll tell you more about that. She's also the CEO of her own organisation called Sarja Partners, and she's had a lot of interesting experiences in the topic we're going to be discussing today. And finally, on my right, I have a colleague, Thibaut Raymond. Thibaut is French, but he loves Sydney, so he currently works out of Sydney and has been really heavily involved in some of the, if you like, the outcomes that came out of our work originally that we did with Annette and her team and Stuart and the team in Australia, in Asia Pacific. And one of the things we identified down there were a number of key customers, which then Thibaut was brought into and given the glorious title of Collaborative Supply Chain Program Manager in that part of the world to really focus on those customers who are collaborative. So all of them will give a slightly longer introduction when they come through. But I'd like to make the opening statement here, and You know, we hear a lot about this thing called collaboration. I've heard it. It must be one of the most overworked, overused sort of words in the vernacular amongst supply chain people. And it seems to me that a lot of people see it as the secret sauce. You know, we'll go out and we'll collaborate and everything will be fine. Well, I've got a bit of surprise for you. In our work, we've, as you know, one of the things that we've done a lot of, and I hope that you'll hear a lot more about in the next panel, is that we've developed a particular way of segmenting customers. It's called behavioural segmentation. People like Gattorna and SCM World are still trying to find out what we do, but we're keeping it secret from them. We're only discussing it with people that we like. And you know, in doing this segmentation work, and we've done it right across all sorts of categories, you know, oil and gas, electromechanical equipment, FMCG, grain, processed meat, you know, you name it. We've done it, and we now have seen the patterns, and I can guarantee you that in any product category or service category in the world, there are only 4 or 5 dominant segments which cut across institutional segments and geographies and cultures and everything, which give you about an 80% fit to the market. And one of those is about collaboration. Only one out of the 5. And in our experience, I think it would be fair to say that we have not seen in any market, in any geography, more than 25% of the customer base being collaborative. And that's probably a stretch as well, okay? So those people who think they're going to solve all their problems by going out and being nice, and I remember, I'll never forget, I'll tell you a story. When I was at Accenture, we spent $50 million a year. These were in the heydays before it went public, and everyone got sort of concerned about expenses, but we used to spend $50 million a year on golf. And when the World Match Play came around, we used to select certain customers and we'd take them off to the US or, you know, Phoenix or somewhere, and we'd have a great time, and husband and wife, $25,000 each for the week. And we'd come back and we'd put our hand out the next week and give us the order, and we'd get the answer, well, hang on, I think we'll go to tender, you know. So, you know, we've got to get cleverer at putting the effort into those people that matter, because, as Annette said this morning, we are constantly over-servicing customers who don't deserve to be serviced, and we're ignoring, as we do in our families, those people who deserve to be looked after. And we're putting our effort and our money and everything else in the wrong places. So what I'm suggesting to you is that the first thing we've got to do is find out in our marketplace, whatever your marketplace is, who are those customers who are deserving, who are genuinely collaborative, not those ones who sort of, you know, say, oh, I'm going to be, like a lot of retailers say, I'm going to be collaborative, and then do the opposite. In fact, I always remember the wonderful quote, and those of you who find this quote in my book will get a prize, made by a former chairman of Unilever at a conference some years ago in Edinburgh, in Scotland, where he said, you know, we only want to collaborate with those people who want to collaborate. And for the rest, we'll give them a good fight, you know. So that's the point. We really want to isolate those. And I know we're going to hear some great examples here from John, because I've seen what he's done there. And I'm sure, you know, we're going to hear the same from Georgia, and again, the same from Thibault, that in the Asia Pacific, where Schneider have isolated a very small number of key customers, and they've had magnificent success in getting that sort of alignment. And let me just finalise my comment here. I'll do 2 things. I'll just tell you what I mean when I talk about collaborative customers. Collaborative customers are those who have values which you can sort of identify characteristics. They treat us as a single source of supply very often. They don't shop around. They tend not to be that, daring in terms of buying new products all the time. They tend to buy the similar sorts of products time and time again. You could almost call them laggards. They're risk averse. And that's part of the reason why they're prepared to pay us a premium in order to get the same thing every time without any problems. Probably the most single key indicator of a collaborative customer is that they will genuinely share information with us. You know, there's so many customers out there who say they want to be collaborative, but then they won't. They want to hide their information. And the other characteristic that I've found is that they genuinely want to, if it's a business-to-business relationship, they genuinely will get involved in joint projects with you. They'll put members of their own team on with members of our teams. We'll go out and find things together. We'll identify value. We'll share that value. So you get the picture. These are people who behave. They put their money where their mouth is. But you know, the world is not full of collaborative people. You only have to do a Myers-Briggs to figure that one out. So as my last comment, I'm just using one slide because I had to do what I'm sort of said to all my panellists, only one slide or two. This is the methodology that I've developed and used very successfully around the world, in also, you know, with insurance companies, with engineering companies, and it's just this. And again, it's in the back of my book, and it's better described there. But essentially, and John will describe exact examples of what we did in Thailand. But essentially, when you identify one or two or three customers or even suppliers, you can do it either way, who you think are collaborative, then you literally invite them to a half-day discussion, and you make it very clear to them this is not a pricing negotiation. You know, and you want their whole team. You want their chief exec, you want their CFO, you want their logistics guy. You know, you want their team, and their team sits down on one side of the table and your team sits down on the other. And the first thing you do, you invite them, or if you have an intermediary like myself who helps to run the meeting, you say, right, let me describe what our vision is, what we're trying to do. And we virtually go into this and we say, this is what we're trying to do, we want to expand here, we're pushing there, and then we invite the team on the other side of the table, the customer, to do the same. And by this time, we're getting along very well because, you know, they're not threatened and they're starting to see that we're genuinely interested in it. And then we drop down a little bit in that methodology and say, okay, if these are our sort of joint vision or these are our individual visions, each of those visions will have some issues associated with them. Obviously, we've got some critical issues that we've got to address. They will have some critical issues that they can address, but we'll probably have some joint issues, some issues that are concerning us. It could be a delivery problem. It could be delivery, 7 days a week, John, that he'll tell you about, and we're only delivering 4 days a week or something. There'll be issues that come out that involve both of us, that middle group of list of issues. And then we take those issues which are concerning us both in an overlapping way, and we say, right, let's debate those on an issues matrix, which is probably the best thing since sliced bread. You know, it's a simple little thing, but it's a wonderful way to, flush out discussion where we say to people, look, let's look at each of these issues on a sort of two dimensions. How important is that issue to me? Is it a major issue or a medium impact issue, or is it a really high impact issue? So across the right, from left to right. And then down the left-hand side, how urgent is it that we address that issue? It could be a low priority in the sense of timing. On the bottom, that's right, low up here, medium and pressing. And by addressing these issues and going through this sort of joint discussion, we locate the issues, as I've tried to indicate on that diagram, and the ones in the bottom right-hand corner are really where the real crises are, and the others are ones that are the next in line. And it's really a priority matrix to help us allocate our resources, both individually and jointly. And once we go from 10 or 12 issues down to 3 or 4, we then sit down together and say, look, what we'll do now is, and we say to each chief exec or head of the company, why don't we appoint one person from each of our businesses to come together in their own time over the next 4 weeks and come up with a solution that's going to be good for both of us. And we'll get them to report back in 4 weeks' time to us. And so each of them then go away, they come up with and they report back the little sort of plan against each issue on the bottom, where they come up with an objective. What are we going to do to address this? What are the things we're going to do, the strategies, what are the actions, what are the budget we're going to need? So, you know, it's a wonderful way of welding the companies together, because it's not talk, it's through our actions together. We're getting people from the business at different levels to work together, report back to the top team, and are committed then to go ahead and do things. So it's a framework that I've found to be very successful, but I'm just saying that. You won't believe a word I say. I'm going to suggest, Jonathan, that you either confirm, and if you don't confirm, you're in trouble, mate.
Fair enough. So good afternoon, everybody. I'll tell you a little bit about DKSH. Those of you probably know what a distributor is, or a trading company. Not many of them left, but we've really changed the focus to market expansion services. We don't call our principals anymore, we call them clients. We call our customers customers, to put us on an even footing. DKSH is operating around 20 markets in Asia Pacific, a number of business units, but the case that I'm going to talk to you about is customers in the modern trade. So people like Tesco, Dairy Farm, 7-Eleven, and those kind of huge customers. Historically, this industry was very client-focused or very principal-focused. But there's been a seismic shift, I think, in the last 10 years, certainly in Asia-Pacific. So the first thing I wanted to discuss was what's really changed. What's really changed in this space between people like us and also the brand guys that are supplying directly. The first thing is, I think the environment has changed. If we look back for the last 200 years, it was a seller's market. If you could get product into the market, it would sell. I think the modern trade has been responsible for changing that balance, and now it's more of a buyer's market. You can buy product everywhere. So clearly you can't just assume that you will sell, and you have to have more focus on the customer. I think the customer's changed. Those of you who've worked with modern trade and these kind of people, they were very adversarial historically. I think that's changing, but it's certainly changed in Asia, because with modern trade coming in, they have not eliminated the traditional trade. So they've got better competition. So they've had to become more collaborative. And when we've done the analysis on these customers, we find they are much more collaborative than we would have expected, actually. And of course, then companies like us have had to change. Rather than just being focused on the client or the principal, we've had to be more focused on the customer, which then puts more focus on our commercial engagement, our supply chain engagement, and then, of course, the in-store execution, merchandisers, and these kind of things. So quite a big change in environment, the customer, and, of course, as the intermediary in this process. So I started this work with John around 2 years ago, and we started to look at customer engagement, and we set up 3 or 4 workshops with these big modern trade providers. And this followed with a number of meetings, and I was put on the spot one day, and I was asked what is my desired state, what is my vision for where we wanted to go, and where are we now? And this is not unusual. I mean, I work with DHL, with Roger and Stuart Whiting, and we did a lot of work on global account management, and there's nothing here that wasn't done 10, 15 years ago in that industry. But if we look at the traditional as-is state, traditional buyer-seller, adversarial, limited top-to-top engagement, limited information sharing, supply chain alignment is non-existent, and service levels weren't where they needed to be. The desired state is obviously strategic partnership, multiple touch points. These are complex relationships: sales, finance, IT, supply chain, etc. And when we came to look at it, it is a continuous improvement model in terms of service level was key. Joint and bilateral cost reduction. We agreed that we wouldn't keep all the cost reduction, and they wouldn't keep all the cost reduction. And then we had to really look at the customer's value chain, which are things like they're interested in category management, sourcing and supply consolidation, order-to-cash process optimization, supply chain management, integration, and in-store execution. But this comment at the end was the one that was, I thought, the visionary point that we came up with together, that we want to be an aggregator. A company like us, I think companies like Tesco in Thailand have thousands of suppliers, and they don't want to manage that, so we can be an aggregator. So really changing the whole picture. And so this was our vision. This is our vision of how we would go about this. And so we did a lot of projects on this, and in the next panel I'll be talking a little bit more detail about this. And we found, and I think we're probably, it's not the beginning of the end, this is the end of the beginning. We've done about 1.5 years to work on this, and I think we're just getting into our jog now, and hopefully we'll get into a sprint in the next period. But I had a number of things that are working, which I'd like to go through with you. First of all, the radical thing is we're now talking to the customer, which is quite a revolution for DKSH, I would say, being client-focused for so many years. Interestingly enough, the customers actually know who we are now. Historically, even though we are top 5 to 10 supplier in most markets of FMCG products, the customer believed the brand to be the driver of the business. They now know that it's actually us as the intermediary. And we're better organized in terms of the alignment with the supplier, with the customer, which I'll go through a little bit later. We've been very successful at developing cost and service-driven projects. So we've taken a lot of cost out of supply chains, and we've done radical improvements in service levels, going from late 80s to mid 90s and to high 90s. So significant improvements in service, and that's gone very, very well. The thing that I'm most happy about, I would say, though, is that now the customers really recognize what we're doing, and we're able to actually, they're asking us to bring our clients in, so we have a tri-party discussion. So we have the customer, our client, and ourselves on how to make the solution better, which is a next level of collaboration with 3 parties. So that's been very, very, very good. So what do we need to improve in this situation? The first one is this all takes a lot of time. Yeah? You need a lot of people involved. You need a lot of functions involved. And to do that and to build a resource pool, we have to build business cases. So we have to quantify every service improvement, every cost reduction, every top-line improvement. I think the second thing we need to improve is that a lot of guys that have been in relationships with these customers historically are actually scared of these customers. And there's good reasons for that, because I think some of these customers have been quite aggressive historically. And so we've had to almost re-educate some commercial people that they're not the big bad wolf that they maybe used to be. And then the third one, and this was, when I thought about this presentation, was really, we've been very successful on the cost and the service side, but I don't think we've been as good yet on top-line growth. And certainly that's why, as we go forward, we're actually putting a lot more focus on hiring more commercial people into this partnership structure to really drive sales, rather than just driving EBIT from a cost perspective. So it's just a little summary of what we've been doing on customer partnering at DKSH.
I mean, that's an excellent summary, but it also brought to mind just a thought that I just wanted to share with you, because it happened both with John at DKSH and with Schneider Electric, and that was that it was the supply chain driving the initiative. You know, in too many companies, we've got commercial people who are keeping logistics people in their boxes back in the warehouse and not letting you interface with customers. My advice to that is don't take that any longer, because you're on a loser if you're going to allow a lot of these commercial people who, quite frankly, don't know their customers well either, to keep you away. And Annette and Stuart initiated our market research. We did not only in the Asia Pacific, but we went to China, we've been to Brazil, we've been to India, and now we're working our way through North America. In every case, it's been the supply chain driving this new knowledge about customer expectations and identifying which of those customers are likely to be wanting to be served in a collaborative way, and then joining up with the commercial people and trying to get them involved to say, right, can we work on this together? But if we'd waited for the commercial people, I don't think they'd be still out there smoozing the customer and getting nowhere.
Absolutely.
Okay?
Absolutely.
Georgia, what is your experience?
Okay. Good afternoon, everyone. Coming from a different side, I don't know much about supply chain. I was a business leader for many years, but for the last 15 years, I'm following leadership trends. And leadership is driving supply chains, is driving everything. So now I have two organizations which I have developed in Greece and beyond Greece. The one is CEO Clubs, and there's a reason I'm talking about this. CEO Clubs is an international organization who inspires leaders to come together in order to learn and grow professionally and personally within an atmosphere of trust. And trust is a key ingredient. When you have a high-level peer network come together within this trust environment, miracles happen. Now, you can see from our mission and values why we have been so successful for the last 6 years. We run the operation here and also in Romania. Now, the second organization, which was always my dream, and I'm really, what I'm doing right now is I'm doing my dream, is Sargio Partners, which is actually, I founded Sargio Partners to reinvent leadership for the new era. Because I could see from 2000, let's say, and a couple of years before, that things were changing and leadership wouldn't be capable. Not because it's incapable, but they need to try new things. Leadership would need to reframe, do things differently. So I got into this business, and today we inspire leaders to develop a bigger mind with vision, mindfulness, and agility. We are a leading executive coaching firm, but what we do is by inspiring leaders, we align their behaviors to the transformation strategy. And starting from the top. Ladies and gentlemen, everything starts from the top. I talk to the CEOs of the companies, and that's he or she are the only ones who understand. So transformation starts from that point. So both organizations, and I wanted to tell you this, they operate and they create trust, which is the basis of collaboration, because today is not the extent of collaboration that we have as teams with our strategic partners, is how we collaborate. That's the important thing. Yep. So just a step back, because in this new era, we need to step back, not only to work fast, but to step back and gather all the necessary information. We live in a world where everything is accelerating, from instability to complexity, and a major contributor is technology, right? And technology is exponential, but our brains are not exponential. And this is where the gap exists. So we are moving to an economy of everyone to everyone, where interdependencies exist, the collaboration is intrinsic to value. And today we see organizations which they need to deliver rapid results, but at the same time, think of sustainable growth. These are two different things. And actually, managing the art of change has become the biggest competitive advantage. Is leadership capable to really face this tsunami? What do you think? Well, the 2015 World Economic Forum, which ran across all sectors and all countries, the 86% of the participants to that forum said that we do have an economic crisis, we do have political crisis, we have many crises, but the biggest crisis is leadership crisis. And we know from many studies that 70% of all the transformation initiatives fall flat on their face. Why? It's not that we don't have the right strategies, but it's the people resistance. People are fearful. Our brain doesn't like change. We have to realize that and work from that point. People are resistant to change, and there is lack of management support here, because management should realize it and support the people. So where, from our experience, we have seen things work differently is where the context of change becomes more meaningful and more inspirational. When a company puts, and a CEO puts urgency on creating a shared vision, not his vision, but a vision among his C-suite, that they work together and they put a shared vision which clarifies the values and the culture of the company. When a CEO understands that this is the most important thing, this engages the people, then the people understand why to change, why to do things, and they get motivated. They get emotionally hooked to the change. So in these cases, it gets very clear when you have, because we have run with strategic partners leadership team alignment programs, and there are two things that are happening there. The context of the future gets clarified, and there's the values then the culture and the values are defined according to the vision of how we're going to get to the vision. And there is an emotional hook for the people to do things. Strategic priorities become clarified, and there are two emphases. There is a lot of emphasis on strategic partnerships. I look back on the shared visions that they have developed. They understand that without strategic partnerships, we cannot do more with less anymore, and we cannot be more efficient. And then a second thing, the social responsibility. Why? Because a shared vision develops a bigger mind. And if it's cascaded the right way to the organization, then it works wonderfully. And here is my point, and I want to finish with this. When you connect with your potential strategic partners, first they need to be clear from your vision and strategic priorities. Which partners? And what value do you want to create? Connect at the point, John mentioned this. Connect not at the behaviors. Behaviors is a vehicle to achieve what you want to achieve. But connect why you exist as partners and what value you want to create in the future. Then it's much easier to see the behaviors that you want to employ and to engage the people, both organizations, to work together, and what actions you need to take to work together. Create bigger context. Create context of purpose for your organizations, and connect at your why and what you aspire to create with your strategic partners. You'll see that your life will be much easier with your partners.
And you'll probably make more money as well. I think one of the key words that you used, Georgia, was the word trust. And one of the problems of trust is it actually takes time to develop. You can't actually buy trust. There are no shortcuts to trust. And that's why if you develop these trusting relationships between partners, buyer and seller, I would go so far as to say that it is a distinctive competence. And what I mean by that is it's something that's bred into the business, and no competitor can easily come in and take that away from you. They can change price, but this idea of trust is very important. And trust is a very cultural thing, right? I think the other thing is, and George, you sort of touched on it as well, is that having identified who are our trusted customers out there who trust us and we want to trust them, the mistake we then make is we go and put the people on the inside of the business who are servicing those people, we leave them in a vertical structure. And we throw people together inside our business like my granddaughter's hundreds and thousands at a birthday party. You know, what we should be doing is saying, now we understand these people who are really key to our business. They are where our future margin is. Now let's genetically engineer inside our business some people who have the same values as they do. So it's a mirroring effect. And let's put a few other people in amongst them to keep them, you know, in some sort of tension. But the subculture of the group servicing those outside, you know, those customers should replicate that culture. And John, we've tried to do that sort of work at DKSH. So there's a few tricks in this. But one of the things that I'll tell you this, we did some work some years ago with a company called Fonterra in New Zealand, who are the fourth biggest exporter of dairy products. And I'll never forget, because we did this global segmentation. They had 3,300 business-to-business customers. They weren't selling to consumers. We found out who their key collaborative customers were. They didn't know who they were. And what we actually found they were doing, they were robbing Peter to pay Paul. In other words, you know, they were ignoring, as we do sometimes in our own families, the people who deserved our attention, and they were chasing all the cowboys who were coming like exocets out of nowhere, demanding this and demanding that. And, you know, I want 6,000 tonnes of casein in 6 weeks. Well, hang on. We haven't seen you for 3 years. We didn't have you in our forecast. Oh, no, but I want it. So the salesman, having said yes, the poor old planners back at head office are thinking, my God, where am I going to get 6,000 tonnes from? There's only two places you can get it from. You can steal it from your collaborative customers who gave you 18 months forecast, month by month, of what they were going to take. And then what you do is you give it to them as a discount. And then when your collaborative customers come in to, you know, for their next monthly allotment, guess what? It's not there. So what do? We expedite production. We start air freighting stuff. So we just blow the business to pieces because we've just lost the plot. We've let these people, these agile, demanding customers who we want to service but on our terms, we've let them completely disrupt our business. Now, I know you're not doing that at Schneider Electric in Australia, Thibault. No. And I'd love you to tell the audience the sort of work you've done over the last year or two. I think it's very impressive.
Yeah. To use the word from Jonathan, I would say we are at the beginning of the end. And I'm not aiming to give you today all the details of what we've done, but I just want to share 7 learnings elements of what we experienced in that journey. So we are still at the beginning, still maturing our approach, but certainly a few things to remember. 2 foundations. And what I'm glad as well is the points on the slide that you will see soon are quite aligned with what's been shared by the panel, so we are clearly aligned. So 2 foundations, you need to have 2 things to start. You need to have a common need. You need to have a reason to collaborate. And that common need make it sustainable. If you go and say, I'm going to collaborate without this sustainable approach, then it's not going to work. The second thing, which is as important, and we do forget it sometimes, is the willingness. The willingness to share data, the willingness to share information, but as well as the willingness to work together, to put ego aside, to work on a collaborative approach, a willingness to trust each other. And those 2 work together. It's a bit like going to church for your wedding, and if you got only 1 ring, it doesn't work too well, so it's better to have 2 rings. I will not mention that I forgot both of them for my wedding a few months ago. But once you got those 2 fundamentals, then you can start to talk to each other, and you can start to build this common vision. And once you have this vision, then you can start. And you secure the willingness, you secure the need, you can move to action. 3 success drivers that we experience in those 2-3 years journey. First, what we had in the past supply chain, our supply chain were working independently. Customer was doing his own way, we are doing his own way. We are all best practices, but the best practices were not shared between companies. And the relationship between customers and ourselves was sales to purchasing only. So what we are doing is creating a multi-level relationship where it's sales, purchasing, but also supply chain leadership. And all the different functions in supply chain start to talk to each other. So it's about planning, it's about order management, it's about operation in DC and transport. And when you do that, then you start to have multiple initiatives going on. And let's say someone leaves the company or someone moves to a different role, your collaboration still remains. For the reason that you got so many multiple links between both companies, that's, you can leverage on the existing link if one is not going so well. Second thing is set the governance. We are in a world of distractions. We all got smartphones. We all got multiple priorities. When you want to start this collaboration, which is difficult, I don't think we will say it's easy. It's difficult to build collaboration across entities. It's appears to be difficult within our own company, so it's even more difficult outside. And to set that governance on what are the goals, what are the agenda, who are the people involved. If you align on the agenda and the objectives and how you review those objectives and measure the success, then that's a key driver. The last one is keep it simple. Why? When you start that collaboration, we had this experience where one customer wanted to do a major transformation on his distribution model. And for sure, we were interested as well, because they will bring efficiency for us. But it was a major transformation. And we changed that and we moved to things that we can do quickly. We start with the easiest one first. Because if you do the easiest one first, then you build the trust. You build the momentum on that collaboration. Then moving to the benefits. I segmented, it looked like a tennis ball. I wanted to do something different, but there are two of them. First one is a mutual business benefit, and as we say, we see profitability, revenue growth, and that's in the essence, and those ones are linked to the common need and the sustainable approach. But there's also a new dynamic in collaboration and in the way we want to work with customers. First is the dynamic with the customers. Now you move from a reactive mode to a proactive mode. You move from talking about issues to talking about solutions. You move from internal best practice to across-company best practice. There is certainly a shift with the customer, and I think we understand better customers than never before. We have such a strong collaboration with customers that we know when they call exactly what the issue. It's not like, oh, they don't know their business. Second dynamic is the employee engagement. Collaboration has been recognized as one of the 6 pillars of employee engagement. And what's happened if you bring people in that collaboration framework, they are put exceptional effort to make it work. And we've seen different people in your organization, in supply chain, but also outside the supply chain, excited about this collaboration. And what drives is then great employee engagement. And also what we found is we built a strong collaboration with our front office colleagues, because they could see the value that supply chain can bring to the relationship with the customers. And they're asking to do more, and they're asking to engage with more customers. We have to be careful, as John said. You can not engage all your customers in a collaborative spirit, but they are promoting this approach now with more customers. Last one is a culture. It's a culture of customer centricity. What's more than having people collaborating with customers on a day-to-day basis? This culture, this shift of culture, we want them to become an habit. And what we say is listening to customers, spending time with customers, collaborating with customers, then got an effect on the whole organization. And it will have an effect not only on the customers that are collaborative, but also we probably understand better other channels and other customers which are not collaborative, which are maybe more agile or lean. And that culture that's of customer centricity, of innovation, and doing something different with customers, I think is one of the great benefits. And all those benefits are for people. And I think by driving this, we got great people in the company. And if you got great people in the company, then you got a great company. Thank you. Thank you.
And I think one of the great things that I've observed in Australia, where Thibault is part of the global supply chain practice embedded in the Australian business, but he's now got the business, the commercial side, the sales and marketing side of the business, coming to him, getting excited at the improvement in NPS scores, and clearly it's impacting on the revenue, isn't it? The fact that you are doing this is actually impacting on the revenue. So as Annette said this morning, we're not here just to keep taking cost out. We want to create revenue through the very excellent way we deal. And the one word that keeps coming to mind more and more in my mind about this is we're now being a lot more precise at what we're doing. We're not guessing. I'd have to say over the last, and Mark, I don't know if he's there, my mentor from 30 or 40 years ago, I'd have to say the last 30 or 40 years of development in the supply chain, we have been guessing. And we got away with it for a long time because growth buries everything. You learn nothing in a period of growth when your company is growing. You only find out the reality when sales start, and people like Michael Dell we would have had some Dell people here today, 6 of them, if Michael Dell hadn't cancelled all travel because he was concerned about Q3 and Q4. What rubbish. So really it's this precision, and the first level of precision is identify those people who are the true core of your business, where your repetitive margin and revenue is coming from, and then we'll worry about the rest as we go from there. John, can you just share with us just one little case example so that the folks here can see some of the practical things that were decided in your case?
Yeah, just one of the customers was, and it was we had the workshop, and we had a very, and this comes into alignment thing. We had a one size fits all. So we had a 5-day-a-week order process. All products were ordered every day by the customer, and they were shipped into their DC every day. Ultimately, so the plan was, can we go to 7 days a week? It's good for us to go in on a Monday. If you order on a Saturday and a Sunday, your products go in on a Sunday and a Monday. The DC of the customer is a lot quieter, so you actually get your trucks offloaded quicker. And what we also did in that example was we actually had A class were delivered daily, B class were delivered 4 times a week, and C class twice a week. So it not only reduced, not only smoothed the load out over 7 days rather than 5 days, but our picks in our warehouses were reduced, and the unloading in their warehouse. So that was a very practical example where, and actually inventory levels dropped as well. So our activity dropped, their activity dropped, same amount of product went through the supply chain, and that was done in around 2 months after the initial engagement. So it was a very practical way. Another one was 7-day-a-week ordering for another convenience store. So, but a lot of
the resistance against the 7-day-a-week was coming from where? From inside your own business.
From us. And the irony was when we did this, the customer, and Kun Penchan, who's here, she managed this project for us. When we went to see the customer, they said, well, actually, you've done a great job, and no one else does this for us. I was under the impression that it was being done by all the other suppliers. So we actually we got into a market-leading position. It's something which I consider very, very simple. And this had been discussed for the last 3 years. Nobody had taken it up or whatever. And it saved us money as well as them. So
because the people on the processing side didn't want to manage order processing and order taking on a Saturday and a Sunday. Yep. Well, hang on. It's a 7-day-a-week world we live in now, isn't it? I think the other thing that I'd just like to mention before I come back to you, Georgia, is that what we're talking about here on the customer side is just as relevant on the supply side. I talk to people who listen to me sometimes, and I'm trying to get them to understand that you'll never get true alignment and you'll never extract the margin completely if you just do alignment on the front end. You've got to look at your suppliers, and you've got to forget about all this mumbo-jumbo that Accenture comes out with, and AD Little and AT Kearney, where they do this strategic sourcing and they tell you, you're using too many suppliers. What you've got to do is look at your supply base, maybe do a clean out initially, but then look at your supply base and do the same sort of behavioural segmentation on the supply side and find out, for instance, who are your loyal suppliers? Who are going to stick with you through thick and thin? Who are the suppliers that can give you the lowest unit cost over a big run? Who are the suppliers who've got capacity so that if you go back for a quick order, you won't go back to the initial ones because they're too slow, but you'll go back to someone who's got the capacity to give you a quick turnaround? Who are the suppliers who have got inbuilt creativity in their business who can help you in problem solving? And I've got sitting right in front of me Dr. Carlos Bremer, and you'll hear from him in the next two panels. But I remember Carlos was running a business in Brazil, and 6 or 7 years ago, and I went down there to work with him, and we were looking at JBS at the time. JBS are the big meat processors. They slaughter 80,000 animals a day around the world. And JBS in Brazil were running out of live cattle, and they were struggling with, where do we get our live cattle from? Because, as you would have heard this morning, there's great contention about clearing the Amazon and making grazing land so we can run more cattle, blah, blah, blah. And good old procurement people who, quite frankly, wouldn't know whether they're upside down or not, said, oh, well, look, why don't you pay more money? Why don't you pay more money and then you'll get more cattle and that'll solve the problem? And Carlos was, he was onto that one. He said to the chief executive at the time, let's do a bit of work on this. So we actually went and did a reverse a segmentation where we segmented and found out the expectations of the supplier, just as we find out the expectations of a customer. And you know what we found? 81% of that sample, and these were like small businessmen that run 3,000 cattle, and I think we surveyed, Carlos, about 250, 300 or something, and 81% of the sample said, we don't want more money. And they listed all the non-price things. We want longer-term contracts. We want technical advice on our herd. We want help with international prices. We want this, we want that. And only 19% of that sample said, give me the money. And out as a result of that, we're able to configure the offer from JBS to the supply base and end up with more capital for less money. And if ever there was a great example of alignment, on the reverse side, that was it. Georgia, coming back to, can you think of a particular case example where there's been, two parties have got together and done something really...
There's many parties that got together.
No, but just can you think of a pair of consenting...
Yeah, one or two examples. There was a pharmaceutical firm.
Yeah.
Can you hear me? Okay. It's a pharmaceutical firm which has a lot of patented products.
Yeah.
So there was a global initiative to really focus on distributing and really having a sales force for these patented products and leave the other products aside. They're actually thinking to divest that. But the CEO, who was very smart, and she got together with another big firm, which is the biogenetic type of generics, types of work, and they had the therapeutic area in the area that they wanted to leave. But she felt so bad about firing the people. And what they worked together into a partnership that the generics firm took the people, and they both happy because they distribute now in the market under the name of the pharmaceutical firm, but somebody else does the distribution. And it was a very good solution for both. We have many also technology firms, and they really help the efficiency of the supply for other CEO Club members. Yeah. Because technology drives efficiency.
Yeah, and I think the other thing about technology firms that I've observed is because they started with a blank sheet of paper 20 or 30 years ago, they don't have all this legacy and cultural drag in the business that won't let them do the things that we know are the things we should be doing. But what I'd like to do now is open it up to the audience and see whether we can find some examples. I'd be very disappointed if there weren't some really good examples out there of collaboration. You know, pairs of consenting adults getting together and making some decisions. So if we got anyone out there that could give us an example or make an observation about this vexed area, or do you in fact want to disagree? Yes, Roddy. Is there someone over here? I knew Roddy was good for a question and answer.
Well, it's more of a case study example.
Yep. No, we'll try it again. No. There must be a bung mic here. We've had the same problem during the day. Someone buy a battery. Can we get rid of those mics and get some...
So there's a great example, and it sort of helps catalyze the understanding of this morning's big data discussion. And this is a publicized article. You can go and read it in the CIO magazine, but I've actually personally interviewed the team. So Merck in the USA and Walmart, right, traditional competitors. So what they do is Merck and Walmart share weather data and pollen data, and then they mine social media. So they have a look on Facebook to see, well, what are the people in Boston saying about allergies, right? So where ragweed happens to be bursting out, and people on Facebook are saying, I can't find any allergy medicine. And Merck actually moves their inventory with Walmart to get to where it's needed. So, you know, what happens as a consequence? Well, there's not stuff sitting in the wrong part of the United States and stocking out in other parts of the United States. And I will tell you that there are tens of millions of dollars worth of savings as a result of that. And you can go and Google that article. It's a very well-written article.
Yeah. Well, I mean, that's a very conscious decision, isn't it, taken by companies to collaborate for a joint benefit. And that's exactly what we're talking about here. Collaboration doesn't work across the board. That's the other key message we want to give. Any other questions in the audience around examples that you've experienced yourself or observations in an article? Yes, way down the back there is an arm.
Get my attention. You know, I learned from the first panel that you have to wave.
Yes, right. Well, I can see you. Don't worry. Don't get excited. I can see you.
So I've got a couple of examples of collaboration. So the first one actually was when I started working at Dell. It was about the second year I was at Dell. First year in procurement, you would go out and you would buy from cheapest suppliers, and if somebody gave us 5 cents cheaper one day, you'd go to them. No loyalty to suppliers. And we all know that had a huge impact. Very negative impact, and so a lot of things changed at Dell, and one of the things that they worked on was strategic procurement and very much around working with suppliers. So while I was working in a purchasing function, I actually felt like I was a salesperson, and I had to go out and sell myself to all of our suppliers and help them to understand why they should work with Dell despite the history. And so for me, what was really fantastic was over a period of 2 to 3 years, how that trust got built up. And it took a long time, exactly as you said, John. You know, trust doesn't come overnight. And what was really great about it was that we were addressing problems together. Yep. And it was very much around taking that 3 to 5 year view. It wasn't a case of looking at what you need to do this month or this quarter, even though he's worrying about it now. But it was very much a longer term output. So that was one example. The other example is more relevant for what I'm doing now. One of the problems that we face in global health is that behaviors are driven by where the money is coming from. And the money is coming from the US government, or coming from the UK government, or coming from the World Bank. And they all have their own ways of doing things. And again, like I said, that drives very specific behaviors. So we work in a very siloed environment. So about 2 years ago, there was, what I referred to earlier, a realization that there's significant amount of money being spent on supply chain investment and the returns are not happening. And one of the reasons is that there was a lot of duplication happening and there were a lot of gaps. And so the donors actually reluctantly got together to actually work together to understand how to align better their investments. And this has taken 2 years to where they've built up that trust. And the first step was very much around the visibility. Let's understand what everybody is doing, and let's understand where we can offer the most value and where we can lean on others to do it. And it's something that, again, it's not something for today and for tomorrow, but again, it's that long-term journey, and it's building that trust and being able to know that we can work together for the right outcomes. So they're just 2 examples that I've had specific.
Oh, they're very good examples. In fact, it sort of reminds me of a much bigger problem we face in the world, and what I'm referring here to is the paradox of government departments and government organisations insisting on tenders. And for everything they do, because they think because they're spending the public money that they've got to get the lowest price and it's all got to be above board. The paradox is, of course, is that very often the cheapest price that's paid on those tenders goes to the not necessarily the best provider, and something happens along the way or they fall over. And for some reason we can't seem to find a way, in government departments at least, of allowing the trust to develop between that government department and suppliers, such that they can, it can go on for a number of years and we don't have to go back to tender, and we can develop the relationship and get the very essence of that. I don't know what to do about that. Someone who works in government may be able to tell me, is there a way out of that? But I think there's a huge wastage in government due to that misalignment of understanding that a lot better things come. In fact, leanness comes out of being collaborative. I mean, in many ways, the extreme lean best organisations are those who genuinely collaborate, take cost out of the channel together rather than pushing cost up or down the channel. So, and the Japanese showed us that, in the automotive industry on the supply side very convincingly. Any other examples? Yep.
Hey, John, I've got the mic.
Who's got the mic? Okay. Oh, there. Oh my goodness! How didn't I see you there, Annette?
I'm kind of short, but I'm thinking very tall right now.
Okay.
One of the things we've been seeing is we've been working with the collaborative supply chain, and we are taking money and cost out of the extended supply chain, and sometimes the cost doesn't come out equally, and we've had a number of circumstances where actually our suppliers are taking out more cost than we are. And that's a little bit of a challenge. And then what happens is our commercial team gets sort of back engaged in that conversation and tries to, maybe extract some value from the situation. So for me, this has been one of the biggest barriers to going faster and to doing more, is the cost doesn't always come out in an equitable way.
Or they won't share it with you.
Right. Yeah, or it's not shared equitably, and that's the challenge. And I know companies like, Walmart and others, they worked on these kind of things. And I don't know if the audience has any ideas or ways they've worked through it, but I think that's one of our biggest roadblocks now is actually working through those issues, which sometimes can take a long time.
Yeah, that's a very good point, because when you can start to see the value there, one party may get greedy and want to take a bigger proportion of it. You got any examples of that, John? Or how have you shared the sorts of value that you've saved?
Sure. Well, it's interesting because I think of one particular instance where most of the programs we've done we've both taken cost out. We had one specific situation where one of our customers was building a regional distribution center, and clearly we were going to go into a situation where our costs were going to go up to ship into this regional distribution center. And the customer at the time was saying, well, your DC fee, which is the fee you pay the retailer, is not going to reduce. So we had a big cost increase that we were going to have to take. So this became quite a heated negotiation, threats of delisting and all the rest of it. But we got through it. We had a good relationship, and we worked through it. And then in the end, what we did was we actually came up with quite an elegant solution. We paid a little bit more. The DC fee, however, went down. So our costs went up on the transport. The DC fee was reduced. But we came to a deal where we actually needed some space in that geography. So this customer was establishing this regional distribution center. They had spare capacity. So we took that space off of them at a lower than market price.
Right.
So it took a while. I mean, this took 6 months or so to fully work through. But it was a quid pro quo. There was a lot of horse trading went on. And I think I haven't done the maths precisely, but I'm pretty sure we both feel good about the deal at the end of the day. But it takes time.
Okay.
It takes time.
One last question. Hugo, did you have a I'm going to, when we finish Hugo's question, I'll just ask for one more comment across the board, just one straight comment, so we can think about that. Yes, Hugo.
We talk about collaboration in retail business. One of the things that is growing, especially in some countries, in Brazil is very small yet, but in Australia I know that is higher, in some European countries more yet, that is private label.
Yep.
And private label is something that retailers now are looking, especially in Brazil, we are looking now, not anymore to combat the brands that this is a stupid idea. You will never change that. Not even to have more percentage margin, because this will not pay the bill at the end, but especially to loyalty and to differentiation.
Yeah.
So based on this, if you have loyalty and differentiation, you need to have your product, because you're going to a new path of trust that your customer will believe.
Yeah.
And one thing is that the majority of the private label businesses, mainly in Brazil, are small and medium-sized business. So a collaboration could be bring them landed the merchandise. You don't need to pay yet, but you pay immediately when you transfer to the store. So this is a possible thing that could be in collaboration to increase the presence of those products that are now looked for loyalty and quality and relationship with the stores. You will reduce the supplier cost and bring a collaboration business with them, because you bring the product, they don't need to deliver many times. They make a big deliver, they stock with you, they don't charge you, but you don't give any delay to pay the receivables. What you do is when you transfer to the store, you pay them.
Good. I mean, what it sort of indicates is that there's many creative opportunities, I think, to do this. Well, in a word, final comment, Thibaut, on this?
Yeah, I would say what we experience is all customers are different. When we talk about tailored supply chain, the tailoring need to be for each single customer. The need they got, the willingness they got, the experience, the background, and so on will be, the culture will be different. So you need really, when you engage in this collaboration with customers, to tailor for each single customer.
Thank you. Georgia?
I want to reiterate and emphasize that always connect with a bigger context, long-term vision for both parties, and connect emotionally with people. We forget that we're people, and we make decisions with emotions. So we need to recognize the emotions of our partners and recognize our own emotions and connect with them emotionally.
Thank you. John?
I was going to come up with a similar point. Every example that I think of is driven by somebody that's been passionate about the project or the program overall on both sides of the relationship, and willing to work it through. So as with it, it is always the people. Yeah.
It's always the people. And one last comment from me, and that is that Yes, look, we can use technology very, very successfully in the collaborative segment, but we, you know, quite frankly, people who try to use CRM systems across the board for their entire customer base are wasting their time, and I've never seen a company do it well. What I'd be arguing is, look at your 10% or 5% of those really important collaborative customers and use your CRM for that only, so you can track and systematically manage those customers so that the feeling of the relationship and the feeling that they want is to be wanted never goes away. So thank you, panel. I think it's been a fantastic discussion.
Thank you.
Wonderful clients here as well. Can you join with me in thanking the panel? Thanks, John. Thank you. Thank you.
And we should thank a really top chairman too. Thank you very much, John.
Thank you, John, for the opportunity.
We've got a break now for 20 minutes. Cup of tea or coffee outside.